Samir Arora is with us, founder and fund manager at Helios Capital. Samir, good morning. Great to have you with us here. Thank you very much for your time. It's a pleasure. Samir, as someone who kind of looks at markets from different angles, I mean, the global, the local, but maybe the political as well. So I just wanted to start with a third element, which we don't usually talk about, but we're bang in the middle of the election season. What's on your mind with regards to elections? What's the mood like? I mean,
the thing is that
yeah.
The good thing about this round has been that it is not in the mind, because we have sort of taken it for granted that plus minus doesn't matter, a few seats here or there, but that BJP alone will be majority and that the NDA will form the government. If politics was too much in the mind, then that would be a bit scary at this stage, because the assumption for now is that it is a foregone conclusion. So as of now, that is how we are going. So we have actually a second worry, which is that if the government comes in and then the budget is there, on which I've been bullish, I keep saying now via Twitter that I hope the government realizes that they should not mess with capital gains taxes. It will be a big negative and will override every other positive that would have been generated by them.
On elections, Samir, with all
it's time to start lobbying.
No. There's nothing lobbying. There's nothing happening. So let's just go with that.
As a representative of the market, I am saying.
I know. But on the election bit, it's obviously a safe assumption, right? I mean, all opinion polls show it. Why should there be any? You can never say no till you get the numbers are in the bag.
No, what I mean is that this idea that there have to be 400 seats for the markets to be happy, I don't think it's required. As long as you have some 280 plus 300 and the overall NDA has 330, 220, I think they'll be equally happy. So therefore, I'm saying from a market, the expectation that we are a little bit in check. And therefore, every day I don't look at politics anymore, because as of now, I'm thinking that at least that much is very easily possible.
I think, this market doesn't need any lobbying, right? Look at the way it's charging ahead. I mean, as we speak, the Nifty is at a new high. What has been driving this market? I mean, domestic flows are coming in thick and fast. What is motivating people so much to get it to these levels despite all that is happening globally, Samir? And do you think we can chug along at this same pace?
No, pace, let's say no for now. But globally, the markets have been chugging along very well. So, by the way, in 1 month, the Chinese market has massively beaten the Indian market. And over the year to date, the US market would be, I think, up 6-7%. And our Indian market, if you look at Nifty 500, which would be a fair representation of the market, it's up 9%. So it's not that we are ignoring the world. We are mostly doing in line and a little better. And therefore, it is more sustainable for now. It's not that we are standing out as having done wildly better than other markets. Therefore, it's comfortable.
So if you're saying that the Chinese market has also done so well, is it fair to make that argument that perhaps money would move out of India and into China? Because that's been a narrative that's going on for a while.
I don't think that it draws that. What I meant was that even China is doing well. It's like saying that some beaten up value stock does well, so will everybody move there? Right now, the thing is that China market either as a reaction. Actually, yesterday night, Apple had good results and they said they are not affected badly in China, and China, their issues are exaggerated. And so the Apple stock is up 6.5% after market. Point being that China is doing okay, because maybe at this level, it has been beaten up enough, but I don't think it means that some new investor will want that now they should have larger allocation to China than they may have thought 6 months ago. But there will be some guy going here and there because he's already invested in China and therefore wants to play out that before he thinks what to do. But I don't think it's become such a big deal that you will have money going there at the cost of India. I don't think.
All right. Hi, Samir. Good morning. Good to see you in. Samir, you've been a fan of HDFC Bank and you've backed that one up. And as you've been telling us on the show quite often, what about Kotak Mahindra Bank? A spate of bad news coming in there with regard to the RBI action. You have a resignation at the top as well. And, the stock still trades at around 2.3 times odd. Oh, your view on this name from your own?
So actually, we held it for many, many years. By the way, when I was in Alliance, Alliance owned 5% of Kotak Bank, the whole bank that is, in 2001-2. And we held it 3-4 years ago, and then we sold it on the basis 2-3 years ago when we saw the issues in HDFC Bank in terms of change of management. And it was visible then and known that in 2 years, which has already happened, that Uday Kotak term will have to end. So we thought the same issues will be faced there, that there'll be a follow-on, a CEO following a high profile and a very successful CEO, and the same issues will come. Therefore, we sold it off. And now I can't talk more on this stock because I have various angles with which I'm associated with Kotak.
By the way, Samir, another thing, right? One of the sort of underlying ironclad assumptions now, which is almost given as a matter of a fact of life, is that retail is the big driver, and it has been the big driver. So that means that any falls which will happen will be shallow, short-lived, and market moves on, and that's been the experience so far. So shocks don't affect us that much because there's a lot of local liquidity, and that is fine. But you had a couple of weeks ago, I think, put out something from the hedge funds who were trading options in India. And, talk to us if you think that is a big sort of issue.
So
and any thoughts?
I think that these market-related stocks will, although we also own some of them, but we are just being cute about it, and one day we have to get rid of them, because I think it cannot be the case that the regulator will not put some restrictions, higher margins, higher something fee, higher contract size to discourage retail. This is too blatant. The ratio of how much is the volume of futures and options relative to cash market in US and all, which is considered as a proper developed market. And you see that benchmark, it is, I think, some 20 times that or some such obscene number. It is absolutely wild. And everybody would see that these foreign hedge fund guys, if suppose they have made $1 billion, which means somebody in India has lost $1 billion, there must be some recognition that this is not helping anybody. But you can't do it now in the middle of the election cycle because that will also affect the market. I would think that these market-related stocks, whatever they are called, what are they called?
Capital markets.
Capital market, I think all of them are too much dependent on volume and action in the market. And in the past, the market-related stocks used to trade at half the valuation of the market because in a bad time, they are doubly affected. One is that the valuations go down if the market goes down. But as soon as the market goes down, their earnings fall even more because they are related to the market itself. Whereas for some other stock, say a bank or pharma company or consumer company, you can say the market has fallen, therefore the PE has fallen, but the earnings have not changed because they are not coming out from the market level itself or the market volumes or the market trading itself. So I think this is a bit too much and it is somewhere around the horizon, but may wait for budget, may wait for election, may wait for something, but it cannot be like this. It is just too wild.
Okay. So I'm assuming you don't have exposure in that part of the market.
We have. Please remember, I tell you what I feel doesn't mean I have. I am telling you, I am fine-tuning it.
Got it.
I just tell you what I don't play games because I don't care for, telling one something and making 0.5% more. But the reality is it's a bit scary, but I'm also live thinking in front of you, and we have thought about it in our this research meeting, and then decided, we'll do it. But I haven't done anything.
That's a nice one. Live thinking.
One day we'll do it.
So just one thing. So and that's a part which many are very bullish on, and it's as a secular kind of a theme because more people will participate in financial markets, equities, etc. What is the best kind of business there? Because you've been in a mutual fund, you've done so sort of across through structures, etc. Is it because now you've got wealth management companies, etc. as well?
Wealth management is a good business.
Okay, you think that is the better one? Because you own the customer, unlike the
mutual. And it is sticky. And, sometimes you may go into debt, so you may earn a little less or a little more. Actually, the work done by the poor mutual fund guys is X times more than the wealth manager, but he gets paid only 1/4 of the fee because the rest of it is taken by the distribution stroke wealth management. So I think wealth management is a good business. By the way, we separately are very bullish on the financial services sector in itself. I'm just saying these market-related stocks are a little bit scary. We might even do a mutual fund only focusing on the financial services sometime soon. But I'm just saying, even then, I'm just thinking that this, because you asked me specifically about this hedge fund and the derivatives trading and the option, I think that is a bit too much. It's too much of gambling.
Okay, I wanted your thoughts. One stock that you guys got bang on is Zomato, right? I mean, as we speak also, it's almost at 200 rupees, so it's a fresh high there. Do you think we are at a stage where this rally that we've seen in some of the new age stocks has reached sort of a maturity, or do you think there's lots more to go?
Well, now you can see our portfolio every month, at least for the mutual fund side. So you broadly will see if you think it's maturity. Right now, we are going with it because the thesis has changed. It was previously a food delivery thing, and we were looking at it. What should be the number of people that you can get, and what will be their average order value and all that. But now it has changed to being a half-an-hour delivery or whatever it's called, Blinkit thing, and therefore it's now a SOTP of two different businesses, with the second part growing at very, very high rates. So we stay with it. We are not adding to it, but it has been a good performer. But there have been many others. So when you said, which you got right, I thought maybe you'll ask me about HPCL or something. But anyway, there have been a few good ones discovered in the last 12, 15 months. So it's all good.
Just one final thought on the hospitality, travel, tourism, aviation space, because all of those stocks are moving around, right? I mean, as we speak, Interglobe Aviation is at a fresh high. Would you want to ride on to this theme as well?
So we have ridden on it, but we were a little worried that in summer, the people in India will not be traveling, because it's election time, and therefore people have to stay if they want to vote, or even otherwise. And second, it's too hot to take holidays in India, and even the business guys will not come back for another 2-3 months, maybe, when the foreign tourists might come, or foreign business guys might come back. So I think this quarter won't be good, but we have most of these stocks.
Okay, Samir, thanks a lot for stopping by and filling us in with your quick take on the index, as well as discussing a few stocks. Wishing you a good day ahead and looking forward to chatting up with you rather soon.